Hey, it's Michael Saul, but everybody calls me Tiny. And this video is inverted yield curve or not. We're back on the path to new highs. Plus, this stock is ready to move. This is stock market analysis for the week of April 1st, 2019. If you would like to receive intra-week updates, go to www.attackthemarkets.com. Put in your first name, your best email address, follow the directions, and you will be on the distribution list. It is 100% free. No payment, no method of payment of any kind is necessary. To join the Facebook group, go to facebook.com/groups/attackthemarkets. If you like what you're hearing on this video, and come on, you know you do, give me a thumbs up and leave a comment so I can move up the ranks in YouTube. And to never miss a video when I upload one to the channel, click subscribe and smash the bell and you'll be notified when I upload a video. Okay, so what happened last week? Well, last week, the big talk was the inverted yield curve and how it was going to lead to a recession. And if you saw my video last week, and you can always go back to my YouTube channel and watch it if you want, I said that, yes, we did have the inverted yield curve. It is a sign. Whoa, I don't know what the heck just happened here. Let's see what's going on here. I think I'm going to leave this. This is like fun. I just had a little problem with the Internet Explorer there. That's why it's really don't like using it. All right. So anyway, I'm going to leave that in because, hey, that was fun, right? It was like a lightning storm. The inverted yield curve, yes, it happened late last week, not the week that just passed, and it is a sign that a recession is coming, but usually it takes 12 to 18 months for that to come into full bloom, and the inverted yield curve has to wait an entire quarter, etc. So there's a lot of different scenarios. But what I also said was that despite the inverted yield curve and despite all the other stuff going on in the world, I still believed we were going to new highs. And I got a comment on my on the video last week, and somebody said, well, you know, if you're worried about the tariffs and you're worried about Brexit, I don't know what the exact comment was. I guess I could pull it up and read it, but what's the point? The point is that, you know, I was saying that, yeah, there are other things going on, the global economy, and, you know, if they have trouble with Brexit, which they did, in case you didn't see that news as well, that can only worsen things over in Europe, and as Europe goes, the world goes. But there's a couple of reasons that I am still thinking that we're going to new highs first. First of all, the technical picture. We are hanging out above resistance. Yes, we closed back below it, but we got back above it. We're coiled up, so I want to see us release to the upside. The technical picture says that. No internals are flashing sell signals here, okay, right here and now. Yes, we have some issues with not all four of the major indexes are in sync, and some are acting better than the others. Okay, great. But the broad market, or at least the S&P 500, which is broad enough, okay, that looks like it will be going to new all-time highs. All right, so just because I think that there could be problems with the global economy, I mean, yeah, I think there could be problems here too. Biggest budget deficit in history I just read, and all this other good stuff. But on the short term, and that's what I look for, the short term, I still believe we're going higher. We are in a coil here. So I would like to see if we release to the upside. I think if we release to the upside, that's going to be it. I think it's going to be the opportunity to get on board. I don't think we're going to rush right up to new highs, but I think from here we will continue to step up and make it. I don't think it's the last chance to get on or anything like that. There'll probably be at least another pause. But again, I want to wait to see if this breaks. If it breaks to the downside, that's a different story. Then I want to see if the 200 and the 50 hold. They're coming together. Here's the NASDAQ, looks the same. The Russell, one of the majors that I said was not acting as well as the rest, right? So here's the Russell. I could draw some lines in here as well. Right, here we go here we go here, right? So this is, it's not a bull flag. It's under the 200-day moving average. It's not a bull flag, but it's in the spirit of one, right? It's a congestion pattern. Let's see if it could break out and get over the 200-day moving average. Here's the Dow. Looks like more like the S&P than anything. Here's the mid-caps. Looks like the Russell, except notice how it's trying to get back over the 200-day moving average again. Semiconductors. Yeah, they got a little bit of a bounce off the 20 EMA, but they had more of a pause candle on Friday. Here's KLA Tanker. Here's NVIDIA, right? So NVIDIA coiling up, right? We watched this. If you go back to my previous videos, I was watching for this consolidation to break. It did. Now this is the first pause after that break. So NVIDIA, yeah, I'd be watching this one. I really like this pattern. Doesn't mean just because I like it, it's going to go higher, okay? However, I love when we break out of a key level or break down out of a key level. In this case, we broke out off of a key level, and now we are consolidating. We still have work to do. There's still a gap here, 195.35, but that's almost 16 points from here. And then you have the 200-day up here at 205. That's whatever, 25, 26 points from here. So yeah, this could be setting up. I love the small candles here. It just means it's gearing up for a move. So watch NVIDIA. Keep your eye on it. Here's Intel. Not much. I'd rather focus on NVIDIA if I'm looking at any semiconductors. So here's the bank. So what did I say last week? I said I'm going to be avoiding the banks for the time being. Is this a bear flag? I mean, yeah, this was impulsive. It was impulsive off of a key resistance level, which was the 200-day moving average. But overall, it's still in a bigger picture. It's still in this range from this high down to this low. I mean, I don't have a short signal per se. And if the market starts moving higher and the banks start fighting, go against it, I would rather go with something with the wind at my back, right? So I want to watch to see if the S&P breaks and moves higher. I'm going to be looking for longs. I'm not going to be looking to say, okay, let's look for the laggards and try to short them. But if the S&P doesn't move higher and instead I'm wrong and it doesn't break out here, and I'm thinking it breaks out here, but I'm waiting, of course, instead it breaks down, then yeah, the banks could be a nice sector to get on board the short side. Here's Bank of America. Here's Citigroup. Here's JP Morgan. But again, not in a rush to short just yet because I think that we're coiled up and looking to move higher on the broad market, and I don't want to fade that just now. Maybe I'm a little bit of a wuss. I don't know. All right. Broker-dealer, looks like the banks. Here's Goldman Sachs. They're still holding up a little bit better, right, than the brokers, the XBD itself. Here's Morgan, back over the 50 and the 20. Watching that. Let's look at Biogen, because we watched that last week when it had the last 2 days of last week came down. So this past week, it's on the bounce. Right here, I don't see a pattern here, but I wouldn't be surprised if it went back down to test it. Don't really know if I'm looking to jump in on the short side here. It could continue to retrace this gap, but I just wanted to take a look at it. Let's look at the biotech index. I mean, besides that BIIB, right, the biotechs look like it may want to try to move higher, get over that 5,200 number. Here's Gilead, not really set up that nice. Here's Amgen, also sloppy. So biotechs overall, the sector looks good, but these big name individual stocks, they're not giving me anything to really latch on to. Here's Amazon. So Amazon coiled up over its 200-day moving average. I just love these patterns, right? Doesn't mean they're going to work. Doesn't mean it's, they're guaranteed to move higher. But coils like this, right? In the history of the market, okay, since the beginning of time, periods of low volatility have been followed by periods of high volatility. Periods of high volatility have been followed by periods of low volatility. This is a low volatility or a range contraction setup, which means it should lead to range expansion. That doesn't mean it has to lead to range expansion up. Could be one way, or it could be up or could be down, right? It's one way or the other. But what I like about this, why these patterns are so reliable, is that a move should occur. Okay, unless something's going to change, unless the way that there's a seismic shift in the way the stock market moves, right? And the stock market works. And AI and everything is being influenced now, and it's the robots, and it's this. Yeah, but those robots are still programmed by human beings, and fear and greed is still a big part of the market. Don't let anybody fool you. Here's Google, pulling back here a little bit. Facebook. So Facebook is back coiling. I don't really see a pattern here, but I could probably force some trend lines on it. Well, now that I say that, I could put these trend lines on it a little bit. It's coiled up. We can watch for a break. We saw it here. Let's see if it'll happen again. Go back up to these highs. Could be in play here. Again, I don't have a buy signal yet. I would much rather wait for a pattern. I much rather wait for a break of the pattern. Netflix, no real interest there. Here's Tesla. It's on the bounce, but I'm not looking to buy this. How about Alibaba? So here's an interesting stock, right? Speaking of retail stocks, right, like Amazon or internet retail stocks. So big move from the highs down. I mean, this got pretty cracked since summer of 2018 into the end of the year, and then double bottomed at the beginning of this year. Now it looks like it may want to try for this high up here, the July 2018 high up at 197. Let's see if it can get going. That's the first start. And then, of course, back to the highs would be the second target. Caterpillar, I like to look at right at the 200-day moving average. And John Deere looks a little bit better, but they're both pretty sloppy. Bonds. So bonds continuing to move higher here. I would wait for a pause to get on board at this point, but yeah, could it continue to rise? Absolutely. But I like when things get ahead of themselves, I like for pauses or pullbacks to get on board, not to chase just big moves like that. How about oil? Yeah, oil on the move. I paid $2.67 a gallon of gas, and of all places at Wawa. I just can't believe it. I was like, this is regular gas, $2.67. To fill it up was $40.25. I drive a freaking, what do I drive? I forgot what I drive. I drive a Chevy Malibu. There it is. A Chevy Malibu. Usually it's like $28. It was $40.25. I just don't get it. It's just brutal. And here's gold, a little sloppy here. So it could be a lower high in place right now. So let's take a look at that stock that I said was ready to move. But first, a quick recap of the market. I think we're on the path to going up to new highs. We are coiled up here, which says a move is coming. Doesn't necessarily mean it has to come to the upside. It could come back down. I don't think we zoom it right up to new highs. I think we step it up. I think the NASDAQ looks good as well. If I'm looking at some stocks, I like this coil in NVIDIA. I like the flake book here, right? Facebook, I like this coil as well. And here's the other stock, General Electric. So General Electric, a stock that got beat up into the end of last year, has had a nice bounce since then. But look at this coil. Now, it reports earnings April 19th, so there's still some time. But, and you got the 50-day, which is this cyan moving average, and the 200-day. That's coming up on a squeeze, right? They're squeezing together, so one way or the other, this should move, and has a good percentage possibilities, even if it just gets back up to this high. So just keep General Electric on your radar. Questions? I got answers. Tiny@attackthemarkets.com. Don't forget, give me a thumbs up and leave a comment so I can move up the ranks in YouTube. It would mean the world to me. Any questions? Write me. Otherwise, I will talk to you in the intra-week update. By the way, I did not send an intra-week update last week after I got a nice influx of new people signing up because a lot of people watching the video. So who knows? I will have an intra-week update this week, though, at least one. And if I don't talk to you then, I'll talk to you in next week's video. Have a great trading week.